Namaskar, hello and welcome to the channel. Today we will be discussing a major financial event happened which may not impact you directly, but it will be impacting India. It will be impacting part of our industry and world at large. So what is this? A major bank has failed. And whenever a bank fails, there are many trigger effect happens. Many domino effects are there. It may impact one person. It may not impact one person. But all those who are customers of this bank will certainly impact some or other way. A few may be impacted a large, few may not be impacting that much. But definitely each and every customer of the bank is going to impact. Apart from this, since this bank is operating in a financial system of a country, so that is going to impact the financial system as a whole. The effect of this failure normally becomes very large. And sometimes because of the prudence policies and immediate response of the regulators and the financial system, so somehow that risk is mitigated very short span of time. But again, something is bound to happen. So that is going to happen in this case also. So which is this bank? How this is going to impact India? How this is going to impact world at large? That we are going to discuss. So we will have a kind of presentation that we are going to share with you. Big bank failed. This has already failed. This bank related to USA. And now we have to see how safe you are and just examine your position and mitigate your risk now. So which is this bank? This is a Silicon Valley Bank which is collapsed yesterday. So this is a very dramatic and very quick movement. Friday morning in US, after a stunning 48 hours in which a bank run and a capital crisis lead to the second largest failure of a financial institution in US history. Second largest financial institution. So that itself underlines the risk for the American financial system and the financial system of world at large, particularly of those countries which are dealing with America and more particularly with the Silicon Valley. So India is one of them. Now, so how it happened? So this Silicon Valley Bank, this is less known bank outside US. Maybe many people in India may not be knowing this, may not heard the name of this Silicon Valley Bank. But this is in terms of category 16th largest bank in the US. And you just see $175 billion this bank carries as a deposit. So the total asset 209 billion as at the end of last financial year, according to FDIC. So when such a large bank collapsed, its effects are manifold. So whatever regulator says, whatever financial analyst says, the effect is going to happen. The only thing is to be seen how much risk is mitigated, how much dent or financial loss is limited, and customers of this bank are safeguarded by the regulators, by the government, by all concerned. So how it happened, what happened? On Friday, March 10, 2023, Silicon Valley Bank was closed by the California Department of Financial Protection and Innovation, and the FDIC, FDIC means Federal Deposit Insurance Corporation, was named receiver. So in America, this is a common practice. Whenever a bank fails, whenever a financial institution fails, which has public deposit, and that deposit is being insured by FDIC, so FDIC become a official liquidator or receiver. So no advance notice is given to the public when a financial institution is closed, that is in India. In fact, in India, we have seen for the many years from now, no bank has been closed. There may be instances when bank has faced some financial problems, but government, Reserve Bank of India, other concerned parties, they come for rescue of the bank. And somehow customers' interest is protected. There may be some limiting factor of time when customers face some problem, and some banks which have different kind of regulation, the customers of that bank also face some problem. But in America, such institutions are declared closed, and for that, no prior notice, no advance notice is given. That is inbuilt in the system of America, that is as per American law. So the FDIC has created the Deposit Insurance National Bank of Santa Clara to facilitate the resolution of Silicon Valley Bank. This SVB, Silicon Valley Bank, is also situated in Santa Clara of California state. So now the Federal Deposit Insurance Corporation will act as a major authority. So they have given a press release, very short press release. So I will just read it out for you. Silicon Valley Bank, Santa Clara, California was closed today by the California Department of Financial Protection and Innovation. So they have given all kind of situations, but there are certain important things which definitely will highlight for you. So all insured depositors will have full access to their insured deposits no later than Monday morning. So that means day after tomorrow, all customers whose deposit is insured will have access to their funds subject to certain rider. The FDIC will pay uninsured depositors an advance dividend within the next week. So what is this? This will not be full amount. This will be a part of the deposit. Maybe you can say it's a kind of consolation. So the uninsured depositors will receive a receivership certificate also for their remaining amount of uninsured funds. As the FDIC sells the assets of Silicon Valley Bank, future dividend payment may be made to uninsured depositors. So that means all customers whose deposits is not insured, they will get a lump sum amount as an advance dividend. And thereafter, gradually when the assets of this bank will be sold out, then they will get some amount out of that. That may not even fulfill the entire amount of the uninsured deposit. So that is how it happens. Now, Silicon Valley Bank failure has created a widespread concern over the customers and non-customers of the bank. Now, what is that concern? Because this nature of this Silicon Valley Bank is to support startups. So basically, it's a startup bank, you can say. This is helping across the geographies, all startups. Indian startups are also heavily dependent on this bank. So they were providing credit. This bank was providing some infrastructure, some marketplace in US for establishing their operation in Silicon Valley. So many things. And above all, that many startup companies, India and many other countries, they were having their deposits also with this bank. So the customers, those they have availed credit, will not have major problems immediately. But those who are having deposits with this bank will start facing problems right from Monday onwards, because the limit of funds withdrawal is $250,000 only. So what happened and how this bank collapsed? The wheels started to come up on Wednesday when SVB announced it had sold a bunch of securities at loss, that it would sell $2.25 billion in new shares to shore up its balance sheet. That means there was liquidity mismanagement. And how this liquidity mismanagement happens? When customers require more payment, but the bank doesn't have liquid funds to pay off. Why? Because the bank has invested funds in maybe non-liquid securities. The liquidity crunch happens because bank may not having sufficient funds to pay off to the depositors. And this happens also due to block of funds in many non-current assets, non-current securities, unremunerative bills, other things. And maybe some investment in immovable asset that is not currently sold out. So in India, we have certain ratio, CRR, SLR, many things are there. And thereafter, central bank also support as a lender of last resort to the concerned bank. But I think this system is not working in the US. Although US claim to be the most foolproof and sound financial system in the world, but this keep on happening. The company's stock created on Thursday, dragging other banks down with it. So capital market is very sensitive. This bank share down, other banks are also impacted. They also kept down. So like in India, circuit breaker and other things applied, but you can say the share price of this bank touched the floor, and the trading on these shares halted. Several other bank stocks were temporarily halted Friday, including First Republic, PacWest, other bank, Signature Bank. These are prominent bank. Then Silicon Valley Bank collapsed. It is declared collapsed. Silicon Valley Bank collapsed on Friday morning after a stunning 48 hours in which a bank run and a capital crisis led to the second largest failure of a financial institution in US history. Bank tried its best. Bank tried to raise capital in a short notice, but they failed to generate capital, and ultimately this bank declared as collapsed. So what happened when such rumors triggered off in the market? People start withdrawing the money. Those they are having internet banking keep on transferring the funds. Those they are inside the branch, they withdraw money. There were long queue on the ATMs, but the system of this bank also collapsed. It means it was deliberately down, or maybe down because of pressure. I do not know, but this happens. In India, the system is temporarily halted deliberately, and it is declared also. But their system was down, so nobody means large people, those they were in queue in front of ATMs, in the branches, or those they were trying through internet banking, they could not do anything. Ultimately, these customers were stuck up. So now let us see how it will go for depositors and how it will go for creditors or debtors. So a depositor will have full access to their insured deposits no later than Monday. This is declared by FDIC. And all those whose deposit is not insured, FDIC will pay some amount, some dividend. And uninsured depositors will receive a receivership certificate. And after sale of the assets of this bank, they will get the remaining amount in proportionate to the assets and in proportionate to their deposit. So that is how things will go with the depositors. Those they have taken loan, there is no issue. FDIC as a receiver will retain all the assets from Silicon Valley Bank for later disposition. So all customers who have taken loan are supposed to continue to make their repayments as usual. Now, with the collapse of this 16th largest bank in US and second largest financial institution after 2008. So this echo goes in all the financial system, entire world, and people are now afraid of repeating the things that happened in 2008 in US. So what is that thing? Here is why things are different this time. So FDIC, other specialists, system financial analysts, bankers, and also the federal expert, they are saying that this time things are different. So the things will not go like 2008. And why this is being said? Because FDIC is an independent government agency, and they will do as per the best suited methods to the public, to the customers, to protect their interest. And so they will roll out a scheme of things from Monday onward. Now, the other things, why people are fearful? People are fearful because it is the largest lender to fail since Washington Mutual collapsed in 2008. And after this Washington Mutual collapse in 2008, things triggered and many small banks failed. That resulted into a big financial crisis all over the world. It originated from US, but actually it impacted many countries across geographies. Now, this bank has correspondent relationship. This bank has so many relationships in financial system. And of course, the customers, depositors, and loan takers. So the bank partnered with nearly half of all venture-backed tech and healthcare companies in the United States, many of which pulled deposits out of the bank. That is one thing. But any company among these venture, tech, or health, if they are stuck up, there will be severe crisis in this sector also. So that is one concern. Now the other concern is, despite initial panic on Wall Street over the run on SVB, which caused its share to crater, analysts said that bank's collapse is unlikely to set off the kind of domino effect that gripped the banking industry during financial crisis in 2008. So these are all consolation being given by the expert, but the customers, the people whose money is stuck up, they are really worried, and it is very likely also. So the expert says, because this time it is not going to like 2008, because the system is well capitalized, there is no problem of money. The banks that are now in trouble are much smaller as compared to what happened in 2008. So this Silicon Valley Bank and other related banks. Silicon Valley Bank is, of course, the second largest bank after that failed in 2008, and it is the 16th largest bank of US. But other banks, which may have some impact, they are not very large, as being said by the expert. But smaller banks that are disproportionately tied to cash-strapped industries like tech and crypto may be in for rough ride, rough weather, and maybe in trouble. So everyone on Wall Street knew that Fed's rate hiking campaign would eventually break something. And right now, that is taking down small banks. So what is that rate hike? We'll discuss it separately. So what is its impact on the Indian startups? Yes. So as we know, this Silicon Valley Bank largely helped collaboration with startups. It was helping to startups in the form of giving credits to them, providing operational support in Silicon Valley to establish their operations in US, providing them credit, and also giving them banking facilities, having their deposits. So this will have a ripple effect on Indian startups, as many of which have significant amounts of funds deposited with this bank. So I have already told you that all customers and individuals, people at large who have deposited money with this bank will definitely have some or other impact, particularly those who have deposited more than $250,000. So it will also impact adversely their fundraising ability, in as much as the US-based bank was playing key role in providing funding to them. So that will happen. Their fund will be stuck up. So that is one major impact. The closure of SVB is a shock to the Indian startups, which are already facing the funding problem. Several Indian startups such as Bluestone, Paytm, 197 Communications, and Bharat Financial Inclusion, who have exposure to SVB investment, may now be worried that their raised funds may be stuck. So see the unfortunate situation. They raised the fund from the market, from their customers, but they deposited with this bank. So now they are stuck up. So for some time at least, they will require some alternative funding. Otherwise, they will face severe problem. This Silicon Valley Bank has been a major player in Indian startups ecosystem, providing banking services and funding to many of the successful startups, including Flipkart, Ola, Zomato, etc. So SVB has also been instrumental in helping Indian startups expand into the US market by providing them with necessary infrastructure and support to set up operations in Silicon Valley. As we have already discussed, the Silicon Valley Bank was providing this support to many startups across geographies. So we had left one point earlier that this Fed hike in rate of interest was a major cause. So this bank's institutional challenge reflect a larger and more widespread systemic issue. The issue is the banking industry is sitting on a ton of low-yielding asset that, thanks to the last year of rate increase, are now far underwater and sinking. That was the major problem of collapsing this bank also. So how this works? This bank invested low interest yielding securities, but then Federal keep on increasing the interest rate, which has resulted further low yield to this bank, and also the sticking of the capital, because they cannot be these bonds and other securities cannot be sold in open market, and nobody is purchaser for that. And even if they forcefully sell this, so they will incur huge loss. So that bank has already incurred a huge loss because sale of these securities. So that is how some you can say the interest hike by the Federal Bank has also created problem. And so many banks, apart from this bank already collapsed, many banks which have low capital base, and there is very small gap between their assets and liabilities. And in case they face the financial crunch, the liquidity problem, they will also face serious problems. So now, industry concern, the financial system concern across the geographies. So following this bank's collapse on Friday, uncertainty in the startup community grew. That was bound to happen. With founders worrying about getting their money out, making payroll and covering operations expenses. These are many companies in Silicon Valley. These are startups, joint ventures, risk ventures, new ventures, venture capital companies, like that. The situation at Silicon Valley Bank may have been worsened by more startups feeling pinched for cash and needing to withdraw funds. Now the bank's collapse risks compounding the industry's cash crunch and broader turbulence that will happen, because many companies who have deposited huge funds with this bank may stick up with their funds and require funds for their day-to-day operations will not getting the funds. So there will be some turbulence, there will be some dent to these companies, and maybe some trigger effect happens also in the financial system. So many experts say, many posts on CNN, many TV channels in US, people are saying that a bailout package may be needed, as a Silicon Valley Bank failure could destroy an important long-term driver of the economy, as venture capital-backed companies rely on SVB for loans and holding their operating cash. Now they are stuck up. So what happened? What is mitigation to the Indian startups? So notwithstanding anything, the Indian startups have with this bank, Silicon Valley Bank, their money may be stuck up, their future program may be stuck up, their plan are hurdled. So many things happened. But now there is one underlying thing which I think maybe many startups, they have not done risk mitigation exercise properly, or maybe there is no risk mitigation mechanism in place. That is why they were keeping, means they were assuring on this bank and fully relying on this bank, and they were doing their business fully dependent on this bank. That should not have been the case. Now they should start multiple banking and operations with other banks, deposit also with other banks. So this is the chart which shows, even during the recession period in 2008-2010, these figures shows failure of the banks in America, United States of America. So this is beginning 2023. This is very small number. The highest number was in 2010, 2008. It started and it remained up to 2011. So there were maximum failures. So experts says this may not happen this time. So this is all about how this bank failed. What were the circumstances? So, but you need to know how this happens, and in such cases, what you need to do. So please examine your position, do some risk mitigation exercise, follow some thumb rule of the finance. In India, particularly those, they have limited funds. The security of funds is more important than the return. So don't run for higher rate of interest. For all startup companies, firms, for all those, they also need to carry out certain exercise vis-a-vis bank also. So this is all about this bank failure. We'll come out with certain other details regarding this bank, and we'll discuss how you exercise your mitigation exercise, carry out your mitigation exercise.